Semiconductors are on pace for their best week in more than a year, and one of the names powering it higher is Taiwan Semiconductor. I bring it up because, Rob, we have a trade alert that you just added and put on a position, again, a digital position in Taiwan Semiconductor. Take us through why.
Yes, Wednesday morning. I think, you saw a major retracement in the semis, down 25% from their July peak. They went from 30 times PE on average to 23 times. We don't think the semi cycle is over. It's going to be bifurcated between the advanced compute chips and a weaker recovery in the trailing edge chips. But Taiwan Semi has gotten down to a level where the world's largest chip manufacturer, with an expertise in producing the most complicated chips in the world, the lifeblood of modern technology, right, got to a point where we thought we could enter. We did the same thing in NVIDIA when we saw the sell-off there. Now, the funny thing is in our semi positioning, we're still underweight. We own a lot of semis, but we're still underweight the sector modestly. I do think we've reset to a level, specifically in Taiwan Semi at 22 times, where you can be an owner of this business. Yes, there's geopolitical risks. There's all types of issues that you could point to. But the fact is, price is a protector. And this stock got to a place where it's attractive. It's got 50% gross margins, 42% operating margins, and a 20% return on invested capital. Dominance.
All right, so dominance is always a key thing here because everybody on the desk on the committee today owns semiconductors in some way, shape, or form. Some are the big names like NVIDIA, others maybe like Taiwan Semi. It's also big, but not as well owned as, say, an NVIDIA. Jim, you're an owner of Applied Materials, NVIDIA, Qualcomm, perhaps even amongst others. Why does the chip trade still feel like it could have upside from here?
Two reasons: the cycle and the secular story. And when those two come together, Dom, it's pretty powerful. So the secular story here is obviously the AI advent on chips, and that's where you're seeing me in NVIDIA, Qualcomm, which is for the edge computing of AI applications, and Applied Materials, which is filling out the equipment for these new semiconductor fabrication plants that need to be building these AI chips. But on the other side, the cycle, I think, is intact. This is what you just said, Rob. I completely agree. We've had a volatile summer, Dom. You know that in terms of chips. Up until July, mid-July, these were really powering the market higher. It's been a little bit weak since then, people questioning the AI trade. I don't think that's where the weakness has come from, frankly. I think it's simply explained by the yen carry unwind, which still has been going on today. It may sound trite to say that, but I'm pretty sure that's what the source of the weakness is. Both the cycle, and by that I mean the global economy powered by the U.S., is very much intact for the chip sector, and you've got the secular story on top of it. This is not a place you want to be underweight. I'm overweight.
Okay, so semis are seeing a good amount of recent outperformance, but software is outperforming chips on this month, so a more medium-term basis. And Bryn, what's the take you have on why we are seeing software a little bit more as part of the story vis-a-vis semiconductors?
I think this is one of those times when you have such dispersion between software in general. I mean, you can look at a Snowflake or a CRM or Salesforce that are underperforming, and a Microsoft and a Palantir, especially like a Palantir where you have an AI and a software story, doing quite well this year. And so I think that right now, money, typically when you look at like hedge fund money, algorithmic money, it's moving into the sectors that are working. And so I think right now, just the easier trade, technically the more momentum trade, continues to be in the semis. And I think idiosyncratically, you can buy certain software companies, but I don't like the software space in general, because once again, like Snowflake cannot catch a bid. I think Salesforce is under pressure. I would rather own Palantir and Microsoft versus the whole sector writ large.
Okay, that's that Microsoft Palantir trade. I also want to hit two stocks that are very much in the news because of earnings and related topics. We'll start with Oracle. And Joe T., I'm going to turn to you on this one. Oracle has been a momentum machine over the course of the last week plus at this point, and then they upped their revenue guidance on top of a good earnings report. Take us through the Oracle story, and then I will take us through another part of the story that's not nearly as good.
Well, it was the earnings that acted as a catalyst for the software industry this week. And of course, I know Bryn's going to mention Palantir. She and I share the extreme affection for that company, and I think it's going a lot higher from here now that it's in the S&P 500. Besides that, other software names that have worked well this week: Guidewire, AppLovin, APP, which we have in the JOT ETF. And then Guidewire has also performed really well, reversing some of the negativity surrounded. So as it relates to Oracle, it's an AI story, and it's the belief that in the cloud, you could now introduce Oracle's name into the conversation like you can with an Amazon, Microsoft, or an Alphabet. And previously, there was a lot of skepticism surrounding the ability to do that. So Oracle is definitely contributing to a budding bullish sentiment in the software industry. And just real quickly, back on the semis, again, why are we seeing semis have the leadership this week? Dom, it goes back to the statistics that you gave earlier, where you talked about the exit from technology. They're not selling hardware companies. They were selling semiconductor companies, and they're going to go right back into the names like Jimmy owns at Applied Material or Lam Research or KLA Corp. So both software and semis are in the sweet spot and the beneficiaries of a recovery that we're seeing right now on a technical factor in the market.
Okay, so there's the Oracle trade, momentum upside. I'm going to turn to you for a tougher question, Rob, which is the momentum downside that we're seeing in Adobe, also software, also AI in part related. Why are you going to still own it? And if so, why?
Yes, we're still going to own it. Listen, they posted a modest beat in earnings. They guided down fourth quarter expectations. There's a company that's lagged year to date, no question, down a couple percent versus an index that's done great. But since June, it's up 35%. So to some extent, it's not surprising to see it take a breather on this. I think the key question for Adobe is net new recurring revenues, and specifically coming out of the digital media segment, which houses AI tools like Firefly, right? And the segment posted 8% year-on-year growth, which is, a bit concerning. So I don't think that's a canary in the coal mine for longer-term underperformance. We still think this company is tremendous, and they will not be disrupted by AI. They will be a beneficiary.
Okay.